Welcome back to your inbox last night, where we read the dozens of fintech newsletters clogging up your inbox, and you listen to it while you paint your cat's toenails. It's February 28th, 2025, and folks, I have one question. Has the SEC just decided to ghost fintech? We'll get into it. Plus, Stripe is making moves, stablecoins are heating up, and PayPal thinks peer-to-peer payments are its next cash cow. Mr. X already started his weekend, so let's get this done, and we can start ours. Okay, starting as we always do, with popular industry news sources. Open banking is growing up. Finextra says open banking is evolving faster than anyone expected, and e-commerce players are the biggest winners. New players, new rules, and more competition. Traditional payment methods need to keep getting more creative, or they'll get left behind. Subprime borrowers are the new fintech darlings. Also from Finextra, fintech companies are getting cozy with subprime borrowers. The takeaway? More access to credit, more financial inclusion, and a new business model that's either innovative or a ticking time bomb. It's been a big week for Stripe. First, CEO John Collison gave an interview discussing growth, innovation, and what's next for the payments giant. But here's the real kicker. Stripe is offering to buy worker shares for a casual $91.5 billion. Guess they really want to keep talent in-house. FedNow's instant payments get a boost. The Federal Reserve's instant payment system, FedNow, just got a facelift, including a higher transaction limit and new risk mitigation features. If this means fewer delays and fraud cases, count me in. I don't want to cause trouble, but anybody else notice the SEC is dropping cases like a bad habit? The SEC just dropped its lawsuit against Consensus, according to the Defiant. First, they backpedal on crypto. Now they're dropping enforcement against fintechs. It's like they're doing a soft launch of regulation. All right, let's talk about the wild world of crypto and Web3, where central banks can't make up their minds. Stablecoins are suddenly Wall Street's new favorite toy. And yet another multi-billion-dollar hack has everyone pointing fingers. First, CBDCs. Europe expands, Russia delays, and the US just says nah. According to Crypto News, Russia just hit the brakes on its central bank digital currency, CBDC, launch. Apparently, the country's still ironing out the details with its banking sector. Translation? The system isn't quite ready for prime time. Meanwhile, CoinGeek reports that the European Central Bank's digital euro project is full speed ahead, showing just how different the regulatory appetite is across the pond. And the US? Well, Federal Reserve officials have made it clear they're still not sold on a CBDC. The stance is basically, we have instant payments, we have stablecoins, why complicate things? Whether that's a wise move or a missed opportunity, only time will tell. Are stablecoins Wall Street's new favorite experiment? Here's something I bet you didn't see coming. The Bank of America CEO is officially getting into the stablecoin game. Yep. Cointelegraph reports that one of the biggest banks in the US is exploring digital currencies. Just let that sink in. Traditional finance, which spent years side-eyeing crypto, is now building its own version of it. Bybit's $15 billion disaster. Who's to blame? And now, for our regularly scheduled massive crypto hack segment, Bybit just lost a staggering $15 billion in what's shaping up to be one of the biggest breaches ever, according to Fintech Brain Food and the Defiant. So, what went wrong? Reports say Safe Wallet, a third-party service, was at the center of it. If that's true, this is yet another reminder that safe is a relative term in crypto security. I mean, at this point, if you're in Web3 and your funds aren't in cold storage, you're basically just hoping for the best, says the person who freaks out 5 times a week when she can't remember where she put her ledger. Fintech Brain Food's analysis. Just how bad was that Bybit hack? Lex is out here crunching the numbers, and the verdict? Bad. Really bad. If you're in crypto, consider this your latest cautionary tale. Let's turn now to our favorite substacks. Fintech Brain Food is also covering what makes a winning fintech pitch. According to Hacker Noon, successful fintech pitches require market understanding, a killer story, and a whole lot of confidence. So basically Shark Tank, but make it fintech. And don't sweat. Never let them see you sweat. It's time for our AI and FinTech report, where we ask, is AI revolutionizing finance or just getting really, really good at knowing how much we spend on coffee? According to the Fintech Times, AI is making serious inroads into fraud detection, personalized financial advice, and risk analysis. Banks and fintech companies are harnessing machine learning to spot fraud in real time, with some firms reporting significant drops in fraudulent transactions thanks to AI-driven security. And it's not just security. AI-powered chatbots and robo-advisors are now managing investment portfolios and offering tailored financial recommendations. In other words, your financial planner might soon be, well, not human. But with all this advancement comes a very real question about bias, regulation, and decision-making transparency. If an AI denies you a loan, who's accountable? And if AI can predict financial trends better than humans, does that mean AI will be deciding who gets government research grants and funding for AI research? Well, we hope not. There's a list of words on the screen right now. According to the Washington Post and the National Institutes of Health, this is the list of words AI would be trained to refuse to accept. The Trump administration in 2025 has adopted a policy that sheerly eliminates usage of certain words in federal grant guidance. Basically, if the AI detects any of these words in a grant application, the federal government will more closely scrutinize it and probably deny it. Which is a bad thing if you're researching how to eliminate bias from AI, since the word bias is banned. Taking a brief pause here for you to have a closer look at the banned words. That's a wrap on today's Your Inbox Last Night. If you love what we do, hit that like button, subscribe, and drop a comment on what story shocked you the most. And remember, we've got executive memberships for those who want some serious perks, and a level for creators who want to repurpose our content. Yes, you heard that right. We want you to steal our takes. Just give us a little credit. Until next time, stay informed, stay sassy, and stay animated. Enjoy the weekend. We'll see you back here on Monday.